Good morning, everyone. How is everybody doing? Hope you had a great weekend. Welcome to the London session on TopstepTV. I'm just going to do a little audio check here to see whether we are going out as intended. And once that's done, we can crack on. Okay, I'm getting the all good from my lovely moderator, Bruno. Like I said, welcome. Let's see what the markets have in store for us. Now, if you're here for the first time, my name is Deeyana Angelo, aka Market Stalker D. I've been trading for 17 years now, and 12 years out of that, I've been trading as a prop trader for various prop firms, mainly specializing in energies and metals. So I'm not considered to be a core equities trader, even though occasionally, like for the reversal challenge last Friday, you may see me pop a trade in or a few in ES and NQ towards the end of the day. If you missed the Friday developments, I did pass my Series 3. However, we still need that risk disclosure document because unless I decide to register myself as a CTA, we still need to ensure that everything you see here is for educational purposes only. This is, of course, me telling you what I see and what I'm going to trade. So make sure you have your own plan. And make sure that whatever I say, you can go back, you can test it out, and then decide whether that is something you connect with. But do not blindly follow any trades that you see either here or the main broadcast or anywhere else, because you need to develop your own skills first. Okay? Now that that's out of the way, let's have a look at this platinum. Platinum is in a rather interesting spot on the weekly and daily charts. So I am going to go to that bird's eye view now, just to show you what I'm thinking here. Now these are all intraday levels that will become less smushed as I start to drop through the time frames. But basically we are sitting in a level of demand that already has a reaction from it. So one of the ways to figure out whether a trading location is good on these large time frames is to analyze where the highs and lows and the extremes of highs and lows are located. Now we're talking about established swings. When I say established swing, it means that you have a clear low and a clear high and then some sort of a reaction from it. It's almost like a little wave, okay? Without that, if you look at equities markets, they're just up or down, right? There's usually not a high, low, high, or a low, high, low, okay? So that is the first distinction. I think this is a fairly good spot for some longs. But as always, the reason why we start this London session a little bit later is because I like to see that first hour trading range getting popped before I do anything. Now let's go down to the daily chart and start zooming into the more daytime frame level. So yeah, overnight we had already a pretty decent reaction. However, I do have this GEX1 level around here, which is 960. So that can be a little bit dangerous because these GEX levels are taken from options. And what tends to happen around them, around certain levels of high interest, is that the market makers might be forced to hedge their positions or to adjust inventory, as we like to say, which can bring a difference in the type of a day that we have. So we may start with a range-bound day, but then some of these levels get run over and immediately you change the outlook from range-bound to a more volatile day. And vice versa. We can also start with an extremely volatile day, but then we run into these GEX levels and the market makers just flip gamma exposure and suddenly everything dies. Okay, so this is why it's important to A, identify the day type, and B, to have some levels that actually make sense. It's why we use VWAP, because that's another level that such a change can happen. That's why I use some of my algorithmic ranges, a SR, a DR. Difference between those two is that I use the regular trading hours versus the full 24-hour daily range. All of those can be very good as reversal points, but also sometimes they just get overshot, and that gives me yet another piece of information. And similarly, distribution curves, aka the value areas, fancy name, right? But that's all they are. The value area is nothing more than where the previous day's business was mainly transacted, and then we take about 70% of that area, and that becomes our distribution curve as a reference point for the next day. Today we actually open platinum inside value, but we are trying to push outside of it, and now I want to sit and wait to see exactly what happens around this 960 level. Let's drill into the day time frame now. So I'm dropping down to the 30-minute chart. And here is where you're going to start seeing those intraday levels that I've plotted. So the first question is, how is the how are the buyers doing? You know, do we have a committed movement? Well, for now, they're still holding this this London open high, right? So we tried to get there. So far, they don't exactly have that much power behind it. So one hypothesis here would be that we took out the Asia high, and now we're seeing a potential for some kind of a reversal, at least down to VWAP. Another caveat here is that we're still inside the initial balance range. So until that changes, there will be no failed auctions. This is just the price still contained inside the first hour trading range. So I want to wait and see what they want to do with the initial balance range first. And if we don't pop it to the upside, there is a possibility of obviously going all the way down. So that would be one set of hypotheses. And then breaking the low, reversing in this intraday demand, which I'm going to mark for you with this rectangle. So this would be Asia low. And then pushing back up. But I am bullish on platinum primarily because of where we are on those little very large time frames, right? So I don't necessarily want to go against that. Ideally, I would like to catch it from a pullback and then go long. Do I use tick charts at all? William Kirshner wants to know. Yes, I use it as a timing tool. So you might have seen me drop down to 100 tick chart and then use that to make my decisions, right? So on platinum, because it's not super fast, you can also use 2-minute and 3-minute charts. But sometimes if you are trading something that doesn't move necessarily through time, so there's a lot of space between the orders, which also can happen in platinum, 100 tick charts are not bad because they kind of take out that pause that you may have on the time-based charts, and then you just have the movement. So there is this, there's a place to use tick charts, and for me, the way I like to do things, I use Bookmap, which is on the other screen, and then I use tick charts as sort of like a guide to how the momentum on those very, very small time frames is doing, so that I know that I'm not getting involved in any trades that are either happening too late, or I'm front running a trade while this ribbon that I have here on the 100 tick chart is still showing me that the price is holding either above it or below it pretty firmly, right? So it kind of stops that high on hopium moment. If the slopes are so these slopes are 9 EMAs, and I have them plotted to the low, close, and high. So that's all they are. And on a 100 tick chart, it can actually show you a nice amount of momentum. So basically, if I was looking to, let's say, go short now, just like as a hypothesis. Well, what do I have with the slopes? Well, nothing really. I have a mild upward slope, and the price is still contained inside the top part of the ribbon. That is not a short, okay? Not yet, anyway. If that changes, then we can get a different sort of entry, right? But for now, everything is still pretty sluggish. Everybody looks like a little bit hungover from the weekend or something because, you know, I suppose crude oil is moving a bit. But yeah, the rest of the instruments that I like to trade for this part of the day, they are a little bit more muted. Gold is trying, they're kind of trying, but for now they're not really going anywhere. It's still contained in Asia high, near Asia high. So yeah, let's just wait and see what happens. Okay, so yeah, I do use tick charts. They are useful in at certain times, certain occasions. Some people use them for trailing stops as well. I've seen people use them like that. But yeah, it's down to personal preference. So if you find that the time-based charts are better for you, just use that. If you find tick charts to be better for you because they might take out some of the noise, then use that, you know, or use a combination of it. Like I do, right? I look at everything. I look at 4 hours, daily, 30 minutes, and yes, tick charts. Gold. Okay, you guys want me to do gold? That's fine. Pedro is asking, well, he's wishing me good morning. Good morning, Pedro. He says, hope you're feeling well and rested. I'm actually feeling pretty well. Yes, I'm very happy to have passed my Series 3, which obviously I had to study for. And that's been sort of the last 5 weeks, you know, getting through the study guide and all of that. And then drilling, you know, about 200 questions or more per day for the last week or so, and yeah, so it worked. I'm very happy to relax a little bit and to maybe get back to some of the other activities. Yeah, it's certainly good to get that off my back. to be fair, Hixie says good afternoon from Thailand. We have people from everybody here. See, Manfred is in here. Good morning. Good morning. Yes, great to see you here. Admirals says long oil and soybean today when it's going down. So that would, yeah, that's not very clear. It's like, let's break that down a little bit more. So why? What levels are you looking at? And yeah, so if you maybe give some more reasons rather than a one-liner, long gold or long oil, long this, long that. It's always good to break down the trade idea. So we don't really like to see people coming in here and going, buy crypto, you know, that's always like, really? And, you know, as we've seen, those of us who have done this Series 3, you know, before you can give advice of that sort, long this or long that, you actually need to have some pretty serious qualifications to do that. So unless you can really break it down as to why you would be looking at that, I don't consider those posts very serious. You know, I consider them one-liners that are just like, do this, do that. Are you a CTA? I don't know. So, yeah. Let's have a look at gold. Gold has been in an interesting pullback, which I think is healthy. Definitely think it's healthy. Okay, so I need GC first before I change the time frame. That would help. All right, so I'm going to move my platinum over here. I didn't take new levels on gold yet today, so just ignore these intraday things that I have here. I mean, for me, this would still be a short on a pullback. We broke some structures. I had this little area of demand around 2618 roughly. We broke through that. So to me, this is potentially a trend change. At the moment, we're sitting in a bit of a thinner volume area, which is probably why this kind of sliced through so easily. And this is a weekly chart. So again, you know, very, very large time frame. We have the weekly POC sitting at 24,21.5. And yeah, I mean, that could be a kind of a longer time frame outlook. When you create your weekly plans, this is the sort of stuff that we start with, right? You zoom out completely, and then you go, where are we chart location wise? And where is the next obvious low? Well, there it is. 2400 all the way down to 2346. So I wouldn't be surprised if we get more downside this week. Is it going to happen today? I don't know. Nobody knows, right? But this is why we do this sort of analysis. On the daily chart, we are now seeing some buyers stepping in, the bottom pickers, I will be guessing. But if you look on the daily chart where we are in relation to the 9 EMA used in a similar way that I use it for intraday, we're still well below it. And this to me would be just like some kind of a mean reversion in order to reach a level where some more sellers can get involved. Let me have a look at this. I do have a level of interest at 2600, which would be roughly somewhere close to Friday's high. So maybe some sellers could step in there. That would be one hypo for me. But I would need to really drill into the intraday time frame to see whether that can happen today or not. So if they start to struggle around 2600, there could be a short in there. But yeah, I'm not really... So this is now turned into a gamma wall and call resistance today. We're opening above value from London from Friday. And remember, that's just a London specific level. It's not, if you try to trade it with COMEX, it doesn't mean much. COMEX has its own RTH value. And at the moment, we're kind of in the middle of everything, apart from that 2600 level, because the ADR and ASR levels are higher up and lower down. So to me, this would be like diddling in the middle a little bit. So for now, I'm not interested in golds particularly. But let's have a look at the intraday. So where is the average session range high? 2607. Let's put a line. That's close enough. Average session high, 2607. 2612 is average daily range high. $25.79 is the average London low. Okay, let's drag that down. And the average 24-hour range low is all the way down at 25.64.6. So way, way down. We are working within the day's range, so there's no abnormality today because we're not breaking through these levels. And we want to see what happens around 2600, which may give some more indication. But one of the things that I don't like doing when you're kind of breaking out is breaking into the levels that have traditionally and statistically brought reversals. So anytime I see ADR and ASR it effectively just means that my profit margin is just not there. So just purely speaking from a statistical point of view, if you assume that this has been the range that we've been in for the last 20 days as a mean average, and you know that the price gets there and you've observed it reversing from those levels, what does that do for your breakout profit margin if you're going to do a break from 2600? Well, it means that you're basically looking at maybe 6 or 7 points, but it depends where you catch it, right? So for me, it's better to look for pullback to VWAP or initial balance high and then try and catch it that way than just getting involved on a FOMO in breakouts. I don't like doing breakouts. I like fading them because that tends to work a lot more frequently. Okay, so Joe Chikungle says, how do you find gamma wall level? You can look at the options chain, right? So that's the cheapest way to do things. Just get a platform that has a bunch of options data and see where the largest number of interests is. So, where are the most calls, where's the most puts located, and then you can plot that on the chart. If you want to do that, if you don't want to do that, there are services that do it for you. I've mentioned this before. I do use MentorQ for that. And I used to look at the Canadian dollar options levels, and then I used to convert them into crude oil. But now I don't have to do that because crude oil actually has its own options, and not only the standard, third Friday of the month expiry. No, they actually have bi-weekly options now. So options activity has started to affect the way the price acts in a much, much greater way, especially since COVID. And that's why I think that if you're not using these levels, you're at a disadvantage. But obviously you have to have something else. You can't just use these, for me, they're not quite enough. So that's why I have the initial balance, which gives me an idea of a day type. I have the value area open in relation to the previous day's value. That gives me the rough sentiment on the day. Are we too far away from value, which is some sort of reprice? Or are we inside value, which is balanced market, right? Higher probability of a range day. So for me, I'm somebody who can take in a ton of information, and I like information. It could be overload for somebody who's maybe not been doing this for so long. But I'm quite nosy, so I need to know as much as possible about certain things. However, do note that my levels are always the same. It's not like one day I will be using 9 EMA and 21 EMA, and then the next day I throw that away, and then suddenly I'm back to initial balance or gamma levels. It's always the same thing, right? So it's not like I'm changing things around. It's always ASR high, ADR high, gamma wall this, gamma wall that, value area that, initial balance edge, blah. It's always like the same sort of 4 or 5 reference points that you will see me talk about. And, you've even seen Coach Jay say the same thing. It's always the same. He's got volume candle, he's got, urgency trade. It's always the same setups. So when you see some of us who have maybe a little bit more elaborate ways of reading the market, some of the newer traders are thinking, oh my God, this is too much, right? But then some of the ones who have been trading for a while and are maybe missing some information in order to make better trading decisions, they're like, oh my God, this is great. Like, why didn't I, come to use these levels many years before? And I was like that when I first came across Market Profile. I went to work for a prop firm. Well, I signed up for an apprenticeship in a prop firm and then consequently ended up getting a funded account from them. This was in 2013. And that's where I first learned about volume profile and market profile. And I was like, why didn't, really, I've been trading for 5-6 years at that point. And I'm like, nobody talks about this. Like, what the hell? And it just opened my eyes completely to a better way of not getting super biased and just being really objective with what's going on. I truly believe the market profile is one of the only things out there that can tell you outright whether you're wrong or not. Like, for example, if you have let's use VWAP versus initial balance as an example. So if you have VWAP, there's just like one singular price point. And to me, it's always interesting. It's like, well, if we overshoot VWAP and then we reclaim it, at what point is that VWAP actually broken? Like, is it, because I've seen crude oil close, 20, 30 ticks above it and then still reverse and close below it, and that's a valid signal. But I've very rarely seen crude oil fail the auction. So you have an entire range of initial balance that tries to extend, the price tries to extend outside of it and then fails. Those lead to very nice failed auction setups that work. Like if you get the right time of day, they have a statistical probability of like 77% of working. And I'm not talking about taking in the last 3 months. I'm talking taking 8 years, 10 years. I've watched that same setup into Euro close, failing the auction. I've watched it happen on most days in my career, and that's why it's one of my strongest setups. And even when we don't get that on the day, and it's just some kind of a mad trending day, I will continue to try do some sort of a pullback. Now, how big of a pullback, that's again a matter of context. But usually you can get some sort of a pullback around about that time of day. However, with singular price levels, I always found that they are a little bit wishy-washy. It's like, am I wrong? Am I not wrong? Have we reclaimed VWAP? And there's always that doubt in your mind whenever the price overshoots something like VWAP. But because the initial balance, it's the first hour trading range, you have a high and a low. And then if you fail within that range, it gives you much more of an objective read, in my opinion. Again, different folks, different strokes. I just found that really worked for me. And it was a complete game changer to my intraday trading. Not so much for my swing trading, because, that's swing trading on large time frames is a completely different way of looking at things. And you don't have the time constraint. You don't have to be like super accurate. You still have to be accurate and time it reasonably well. But by and large, you will always use much larger stops for your swing trades, right? So it has a lot more room for error. Margin of error is much greater. However, intraday, sensitive to everything that you're doing wrong. Number of trades per day. Get it wrong one day, it's going to harm you. Positioning. Increase your position sizes like a lunatic one day. That's going to eat massively into your profit targets. And what I see people doing constantly, especially with the average in style, is that they average in, I would say, the wrong way, right? So what happens is that's basically pyramiding in. That's what it is. We call it averaging in. But really, you're pyramiding into an existing position. And what most people do is they plow in with one, then they add another one. So that's like 100% increase in your in your position size. And then they add another one. So now that's like 200% increase. It's crazy. It's like, that's not how you do pyramiding. Right? So you're supposed to have a bigger chunk of the position at the start. And generally, let's say 5 micros, and then the next time, if it goes your way, you enter 3 micros. And then it goes your way, you enter another 2 micros, and then it goes more your way, you enter 1 micro. Now, doing that is a better thing for your average price than just plowing in with 5, then another 5, then another 5, then another 5. Okay, that's the retail way of doing things. But if you really want to practice scaling in like a pro, you will have a reasonable position that is not going to harm your account balance too much. So let's say if I take 10 micros on let's say you have about 5 or 10K's worth of buffer in your 50K XFA. And you start by plowing in with, let's say, a 10 lot, because micros equivalent to 1 mini, right? At that point, when you've got 10K, you can start doing things like that. So you're still only risking, in my case, I risked about 35 ticks. That would be like 350 per trade. So, not much cash at all compared to the account balance in prop terms. Okay, it's still very aggressive if you were trading like that in your private brokerage account. But yeah, so scaling in 10, then maybe 5, then again 3, and then 1. Not scaling in 10, 10, 10. So, it's it's very interesting to me. Let's just put it that way. You see just people YOLOing it, and they're like, well, scaling in doesn't work. Yeah, it doesn't work because you're not doing it right. Or you're scaling in at the wrong areas. Or you're scaling in on fake breakouts, and things like that. So just be very careful with your positioning. I feel like too many people are YOLOing their position sizes for averaging in and then getting beat up by the market and then wondering why that's not working. Let's have a look at crude oil. Joe is asking me to do a similar thing that I've done on gold, to do the same on crude oil. Okay, now crude oil, I don't think I have data just yet. I did have a level around 67. Last week, I had kind of like a level of interest that was pivotal at 67.75. Now, we did smash through that, but a couple of times we managed to get some interest from it. Now, obviously, we've moved much lower, so some new levels have to come into play, and 67 is one of them. So that was a level of interest, and the good thing about these options related levels is that they will get revisited in the regular trading hours as well. So it's not like, oh, we tested them once and overnight and that's it. They can still be very, very, very much interesting to the market makers and hedgers. So this is where the most level puts are. So I'm just going to put that here. And then what else do we have? We have the London value low at 67.67, just literally coming up. So we're opening below value. Let's change that to my purple. So 68.34 is the value high from London. But I do have a couple of issues. If we're going to go into the value acceptance, there are levels to watch out for at 68. So 68 is my average session range high for London. So I'm going to change this to red and dashed. Now we also have a gamma exposure level right there. So if you're aiming for like a value acceptance to go long, just watch out for that 68 area. That could be a wrench in the works, a stopping point for any further movement. And then ADR is all the way up at 68.30. So kind of lining up with London value high. But again, because of that 68 level, I wouldn't be that hopeful that this is going to work out. To the downside, apart from that 67 level, I do have the London ASR low, which is 66.20. So quite far down. And again, no abnormality today as well. So we have a regular day that is still inside the statistical range. And where is my average daily range low? 65.95, so just below the round number. Oops. Get rid of the caps. So those are your orientation points. We have the weekly kickoff high or something here. Oh yeah, that was the weekly, I think it was weekly kickoff low actually. So 68.50 is the level that Hogue pegged last week. There is some option stuff around there as well, and if we manage to smash through that at some point this week, it could be an acceleration point for the longs. So there's room here for really both sides of the story. And right now we have a neutral day type for London. So before NYMEX kicks in and before that overlap, I would be maybe looking for shorts in crude oil still, because we went below the initial balance a little bit. And now we're going back over it. So it's kind of like an elastic band that's being stretched both sides. And that's never a good thing for momentums. And sure, you can have an asymmetrical neutral day where one side just massively kicks into a trend. That can happen to a rate of about 8%. But it tends to happen around some releases. Like it never just happens out of the blue, right? It's either post inventories, or it's because we had FOMC, something happened in the underlying correlation of all of the assets that we have, like, interest rate changes. And then it sort of brings an extension to one side, where one side just goes crazy after we've already established a neutral day. So yeah, those are rarer, but like I said, you can increase the probabilities of them by looking at some of the more high impact releases that will change how the markets operate underneath. So from a macro standpoint, can you please explain the indicator that you're using below your chart? You're talking about the DMI. Like DMI is just your directional strength indicator. So once something kicks off into a strength, how much juice is there behind it? And it does so by measuring the price levels, the size of the move, and a couple of other things. So it's got ADX inside it, and it also has a directional indicator. So basically what the premise of this is that if something goes into a breakout, you want to see it doing something like this. So these yellow lines, the yellow line, it tells you that there's strength of movement. And then if ADX also climbs alongside with it, which is the white line, it effectively tells you that there's a strong uptrend. So for example, if I was looking for shorts here and I saw this happening, the expansion of the movement, I would just pause off the trigger and wait. And additionally, I use it in combination with the slopes on a very low time frame of 100 ticks, where if the price is above the slope, I don't touch it for shorts. And if I have a long hypothesis, I might get involved at that point. But until such time that this settles, I will leave it alone. So that is, it's a very, simple indicator, nothing that much to it. And I've placed these blue and pink areas just to make them a little bit more visible to myself. So naturally, if you first put this on, it's going to be blue and so it's going to be red and green. But I don't like those colors, so I decided to make them a little bit less stressful rather than like red and green. And I made them blue and pink, just because. Now these are columns, and I'm going to tell you what the settings are in here. So I have a DI length at 5 and ADX smoothing at 10. I do use very, very fast settings here. If you've seen Coach Robert Cooney, he uses 10 and 21, I believe. But even though he is much more of a scalper than I am, that's his core style, he does trade NQ primarily, and that is too fast to have this sort of setting on. So if I was trading NQ, I would also increase this. But I trade products that are quite a bit slower than NQ. Therefore, when the momentum appears, I want it now. Like I want it to show up immediately. And that is the reason for me using DI length of 5 and ADX smoothing of 10. If, let's say, copper starts to move, it's not going to move crazily like NQ does. And then it's not going to have, super wicks all over the place. It's going to be, starting the move and then just smoothly pushing into the new trend. So that's where the DMI comes in, and that's where I combine it with my 9 EMA ribbon. So hopefully that helps. But yeah, I don't use, just want to really make this quite obvious. I don't like using traditional indicators to tell me which side I should be taking. Okay, there's a huge difference between, DMI is going up. But if I don't have a hypothesis that speaks to that movement around that zone, I'm completely going to ignore what the DMI is telling me and wait for my levels, right? And my levels are always taken from non-lagging indicators for the most part. And what does that mean? Well, I'm not taking, for example, if you look at David Green, he uses mostly lagging indicators, and that works for him. For me, that doesn't work, okay? So I want to have the initial balance high and low, and you might say, well, that's lagging because it happened 2 hours ago. Well, no, because you have a line that's just not going to change, right? It's been price action created, and the initial balance range stays there throughout the day. It doesn't change, it doesn't lag, it's nothing, it's just there as a fact. That's where we were first hour of trading. One of the issues that I have about RSIs and all of that is that if you go into a heavy trend day, it's going to start telling you that everything is, let's say we smashed down on NQ. Well, RSI can easily tell you that everything is oversold. And then you keep trying to buy it, like most people do, and you're getting absolutely slaughtered. And you're like, well, what's going on? To me, it's always been a better way to have a look at whether we have single prints, whether we've extended the initial balance to the other side or not. And on Friday, it was more than obvious that we just had a bit of a messy trending day, but trending day nonetheless. The extension of the initial balance was to one side, down, right? So until that state changed, or until we built structure around something, like either a POC or, built structure in the TPOs, and you started seeing the slowdown, there was no reason to buy it, okay? So once you learn to objectively look at your markets away from your emotions and away from, wishful thinking and being high on hopium, that you're going to catch some sort of an amazing turnaround, which you might, once in a blue moon. But then what happens with people emotionally is that they want that every day. So they start fishing for bottoms every single day. And yet they caught it on a, statistically low probability day when everything just went crazy. So, and then people chase the dopamine rush from that. But if you just kind of turn around and go, okay, how does Mick put it? Mick from the risk team, he says, all right, I caught the tiger by the tail, right? I really kind of had this working for me, but I need to understand that that's not a regular thing. This is where knowing the stats around the day types and how often the markets trend, properly trend, versus how often they range, it can keep you out of a lot of trouble. So for me, I prefer to use real-time order flow analysis via Bookmap, but then also looking at the inventory that was left behind by the market makers and the institutional players on larger time frames. And what is that? It's supply and demand, it's the value areas, it's all of the stuff like POC on volume profile, very large time frames. So those are some of the orientation points that rely on actual, like I said, actual inventory that people held at that point. Not some random, RSI or moving average, which can be relevant because it's almost like a self-fulfilling prophecy. Like 200 DMA is something that I do have on my charts away from this screen on my main charting platform. And why? Is because I know that hedge funds look at that. Similarly, with the previous day's highs and lows, hedge funds look at those. A lot of them have long-term strategies that will have, the entry points around those areas. So it would be silly for us not to look at that. But at the same time, on an intraday time frame, it's a little bit of a different story. Like, you need to be accurate both in the time when you're getting involved and the type of a setup. And that requires inordinate amount of consistency. Right, I'm seeing some buyers on platinum, and what I'm seeing here is the 18 number of contracts on the dome. That tells me that they tried to go lower. And look at this, GEX1. That's exactly where they decided to get involved. So to me, this is now a long, and they're going to hunt this 963.3. What happens after that, I don't know, but I am going to enter 2 lots here. Now, platinum is cheap, right? Platinum is like $5 a tick. And I'm probably just going to aim for this London ASI high if I can get it. But yeah, I know that whenever I see this sort of disparity between some of the other numbers of units around the prices in the dome, this is where liquidity is. And if I have a direction in mind, I want to see that happening, right? Sometimes you will even see like 40 units there. And right now we have 18 units on 63.3, and then we have 20 units on 63.5. So somebody, I would say this is probably the same player, who is looking to enter at that area. And now these guys who are long, and we've gone to GEX1, reacted from it. We're breaking outside of the initial balance, and now I want to see this get hunted. So we're going to wait. Usually they in platinum, these kind of levels will get hunted, and then that gives you a loose idea of direction. So for example, if I was looking for longs, but then these guys appeared to the other side, to the downside, and I would see like 18, 20, 40 contracts laying around 960, that would make me doubt my sustained auction idea. But seeing them up here gives me a little bit more confidence, right? Prince Khaled, I'm not going to do NASDAQ because I'm not a NASDAQ trader. I think we have an abundance of NASDAQ traders. I am not interested in it, especially not at this time of day when NASDAQ is an out-of-hours product, heavy out-of-hours, and you're going to be watching paint dry on most days, and then every once in a while, equities go into a trending move. I can glance over it, but I can see that ES only has like 40 ticks for initial balance. That's pretty pathetic. And NQ. IB size about 200, which is nothing for a product that moves over 1,000 ticks in a day. So I would say that to me, equities of that sort, the ones that trade on the New York Stock Exchange, they're not my focus. I am, like I said many times, I am an energies and metals trader. So if you want to learn about alternative markets, this is the place to be. If you want NQ traders, you have literally a ton of them during regular TopstepTV hours. So I'm not going to be going into markets that are A, out of hours for this time of day, and B, simply not of interest to me, because I think they are A, unsuitable for new traders. If you've ever followed me on Twitter, you will see my rants about that. And B, I think people are just chasing dopamine rushes with that product. Maybe if you're somebody who has traded for many years, like for example, I did that reversal challenge on Friday. On MNQ we traded. I think, I did have my reservations about it, but at the same time, I find the reversal challenge a pretty interesting exercise in situational awareness. And I won it, right? I've never done it before, so I won the reversal challenge. We don't get anything for that. We just get a pat on the back. virtually, because we're all working remotely for the most part. But yeah, so it just shows you that if I wanted to trade NQ, I could. It's just a total personal preference that I hate the thing. I think it stresses people out a lot. And what I've seen over and over in my private coaching is that people are so enthralled by the fact that NQ can give them quick profits that they do well, and then they get high on hopium, like I like to say. And then the very next day, they derail their XFAs, their combines, and they start trading like complete lunatics, chasing the same high. That's why I don't like teaching people on NQ. That's why I don't like analyzing it. If you're Rips and you've been trading for 10 years, or if you're Dakota and you've been trading for 15 years, knock yourself out, man. That's more than enough time for you to learn how it lives and breathes, to learn yourself, first and foremost, and to be an emotionally resilient person, right? Without that, it's just, it's just a dopamine rush that you're chasing. So, I'm really not in favor of analyzing anything NQ, but it's not like I haven't traded it. I have. It's just a personal preference. I don't like the thing, right? Michelle Ryan says, Dee, can you explain how you use Bookmap to help validate your entry or exit? So Bookmap has the bubbles. So the bigger the bubbles around the area that I'm trying to get into a breakout, the better. So for example, the way Bookmap works, I'm a little bit afraid of running Bookmap when I'm running this. So basically you have... I'm just going to try and illustrate it, because if I open it up, I'm scared of crashing the stream. But let's say that we have a Bookmap, and then you see some levels, and you see huge amounts of orders stacked up like this around a particular price. And by the way, that sort of thing is what you are shown on the dome. So Bookmap is like a cartoon version of the dome. That's all it is. But then what I like about it is that it smushes volume into price action as well. So as the price is moving, they will have bigger and bigger bubbles if there's a lot of volume there. But if it's sluggish, the bubbles will be small, right? They're just going to be like, yeah, we're kind of getting to the level. And that would lend itself more to these areas of liquidity being reactive, so bringing us a reversal, okay? So that's one way. So small bubbles in the run-up, no commitment, just kind of crawling up to a level, and, nothing, maybe an odd big volume, but then it gets eaten up by the other side. And, just an orderly crawl up to your thicker areas of liquidity. I like to also use these as confluence. So if I see something on the dome, I want to see that I have something like London ASR high there as well. So it's not going to be random. It's all still going to be tied into all of these levels that I have away from Bookmap. And then the intraday liquidity should match up with that. If it doesn't, then I don't want it. I don't care about it. But here is where the breakout can happen. Like right now, we have this 69.3 order at 18 contracts. And on Bookmap, that's going to look something like this, right? Just like one set of orders, thicker orders there. So what I want to see is a huge commitment and big bubbles on the run up to that level. And then either to get taken out by this big volume that has come in, or for these guys to disappear. Because sometimes if they see an aggressive move up to it, they'll be like, whoop, pulling order, and then they're gone. Now, if I'm looking for a failed auction and I see that, I will be out, right? Because I'm like, well, these guys pulled it, this is going through. There is now nothing in the way to prevent this from just smashing higher. So those are a couple of ways to use Bookmap. Bookmap is not for everyone. It's like some people love it, others hate it, right? And I've had some incredibly competent traders tell me that it's too much for them. And we're talking people who are pulling withdrawals, like payouts from Topstep and other prop firms by like 7K, 10K, 15K a month, easy, right? So some of them love it. Others are like, Jesus, man, like, what is this? This is too much. So you have to try it and see whether it does give you a, useful information, or whether it's just total rubbish for you. And it's okay if it is, right? Not everybody will gel with everything that the traders on Topstep are using. So it's down to your personal preference. See if you gel with it, try it out. If you don't gel with it, you always have time and sales and Dome, which generally have less clutter. But at the same time, for me, Bookmap is visually nicer and I can take in a lot more information. But to repeat, I'm somebody who can take a lot of information in. Not everybody's like that. I'm perfectly happy with a ton of things in my head. I have photographic memory that helps me with this. And I can understand that it's not for everyone. And it's perfectly fine. Look at Dakota. Dakota doesn't use the Bookmap. He doesn't use the Dome either. Nothing. What is he? Number 1, number 2. Like, he's maintained, the top spot on that leaderboard throughout most of the year. And he doesn't use any of that. Now, he is a special guy, right? So we know he's incredibly emotionally resilient. He has a big risk appetite, and he's very competitive. And he also can completely withstand, 40%, 30%, 20% accuracy and aim for that large risk reward that accounts for the trades that didn't quite work out. Not many people can trade with 30% accuracy and be happy, okay? People need reassurance, right? And I think you can only trade that way, like Rafa and Dakota are doing, if you are completely confident in your trading system. So if you're not there yet, you probably need to aim for like a more median value. So, 40%, 45% accuracy, 1.5, 1.3R risk reward. Those are some of the traditionally winning combinations that have a low risk of ruin. And I think risk of ruin is not talked about enough, especially when people are scaling in 100% at a time. But, maybe we can leave that for another stream. All right, let's have a look at some more questions here. Let's see, we had a troll. Thank you, Bruno. It's so funny to me that, in a way, like that guy obviously woke up on the wrong side of the bed, but also to go to the length of actually creating going through a pain of changing your username to something that you perceive that will be hurtful to me. That's actually quite complimentary to myself, because it means that I'm doing something that people have noticed and other people have decided to expend extra energy to try and derail my energy, which doesn't really work. So, I feel for you, So for Dee is such a whiner, I love you, man. So go sort yourself out. I don't know what's going on in your life, but try to find a hobby or something. Yeah. Okay, so what time is the CL most interesting to trade? Okay, so for me, I will tell you the EU close, so around the Euro close. Anytime post 9 a.m. Central up to and half an hour into Euro close. If you get a meaningful reversal during that time, it usually has legs to give you a pretty decent pullback. But again, you have to be quite objective with it as well. So you can, for example, go, well, we've only pulled back like 10, 15 ticks. That's not enough. This is probably going to go further. But if it pulls back 30 and 50 ticks, then you've got something. I actually have held trades of that sort all the way through New York lunchtime up to my 6 p.m., which is, trying to do my time zones, 12 p.m. Central, I think. Yeah, -6. Yeah. So, and it, works out pretty nicely. Do take care that I use targets of about 50 to 70 ticks on crude oil, but I will happily take 35, 40 if I kind of manage to front run that Euro close. But the kill zone for crude oil is that post 9 a.m. and then up to 11:30 a.m. Central. So that is the time when I'm looking for crude oil trades. Robert Trades Future says, hi Dee, nice to meet you. Thank you. And he says, I learned on ES and mostly trade ES. NQ causes me to gamble sometimes. Yeah, well, you're obviously a more experienced guy, because you would say sometimes. If you were a beginner, you would say that NQ causes you to lose control completely, which is what I see constantly. So yeah. Sarah Lucas says, do you trade silver? I do, but not on these accounts. So prop accounts for me are for slightly less expensive products. And even though I have traded Nikkei, I've also lost XFAs due to Nikkei because I think it's too expensive and it doesn't allow for much wiggle room. And I think the position sizing, if we had micro Nikkei, that would be nicer, but we don't. So we have to work with full Nikkei. And for that, I usually like to have about 30 to 50K to maybe do a Nikkei trade. And even then I would be like, it's a little bit much. So yeah, silver similar. Even though we have micro silver, I still think it's quite expensive for these sort of accounts. But yeah, so I do trade silver. Silver is, to me, a little bit seasonal. It doesn't always have smooth trends, but when it does start to go on a trend, it's beautiful, right? It's kind of like NG as well, like natural gas, like nothing, and then there's like a seasonality thing, and then there's more demand for it, or, problem with supplies, and then it just runs for like a couple of weeks, and it's great. But I do prefer to do a swing trade in silver. So again, that's not really that conducive to prop accounts. And for prop accounts, I stick to intraday exclusively, and I will trade things that can bring me very nice intraday moves that can finish in one day, right? Or in a couple of hours. Day trading is Ria says, I'm a reverse engineer. Awesome, that's what we want. You see something on TopstepTV, you like it, and then you reverse engineer it. Isn't that how we all built our systems, right? Shane A says, who are these people? Where do we learn from them? I'm so done with imposters. Yeah, there was one of my... well, he's kind of a Marcus Stalker alum at this point, but he's a friend of mine. He actually sent me a Twitter DM with somebody who created a fake profile of mine. So it said pip_raider_. So I'm like, yeah, that's obviously not me. And it was like texting him and it was like, why do you, like, what? Why? But it does tell us that we've kind of reached a certain level, I suppose, of being known in the industry, for some people to think that there's some sort of a, scam to be done or something. I don't know how, what the thinking is, but I suppose they're making these fake profiles in order to drag people into investments. So stay safe there, guys. Like, be really careful when you're reading, like, what kind of a username these people have. And the trolls, trolls are trolls. They always have problems, right? Every time that I've engaged with a troll, it turned out that there was something happening in their life. Or, unfortunately, I like to joke, they're off their meds today. But I kid you not, there was this one guy who had a problem with my colored hair at one point because I had flaming red hair. And he kept, doing some, he kept sending me really horrible messages on Twitter, right? And, at this point I have a pretty thick skin about that, but I just jokingly reposted one of them and I said, somebody's off their meds. And then he DM'd me and said, well, if you must know, yes, I do have problems and mental issues, and I have been on antidepressants. So I was like, there we go. Okay, so go and cure yourself, man. Like, go and, I don't know, talk to a therapist and stuff. Don't get on Twitter and get all like your knickers in a twist because somebody else can trade and you can't. Like, and it always comes from that. There's like some sort of jealousy that we're doing something in life that they're not, and they're like, I'm going to show you that you're not all that you are. And I was like, yeah, I don't care. It's like, you do you, man. I still love you. you know, there is love for you in this world. Okay, that's all I'm gonna say. What about micro Bitcoin? Coach Paul has been talking about micro Bitcoin for a while. So I mean, let's have a look at it, right? I don't trade crypto because I'm a little bit scarred from only taking it from 4.5K to 20K, and then it shot up just literally like 2 months after I took off my trade. I was so annoyed. So if Dee can get annoyed, that would be why, because she. I have a penchant of doing that. Like I kind of go into a trade and then it just runs for like a million ticks or something, or it carries on for years and I only take a portion of it. So I'm not very good at longer term investments when it's just me deciding on them. Right, daily chart. We are starting to build some volume around this area, so that could be a slight sign of distribution. Having said that, this has gone on a massive run, so we are still sitting in a very, very strong upward slope on the 9 EMA ribbon. But like I said, we are not having a new higher high just yet. If that changes throughout the day, and if we have a higher high, then this trend is not over. But yeah, just be a little bit careful because we have been range bound for 1, 2, 3, 4, 5 days now, which can lead to a bit of a liquidation phase. So you have a distribution, then it starts to turn, and then it goes into liquidation. What is the 100 tick equivalent on a range chart? I don't know, because the range charts is, I mean, it's similar, I suppose, except ticks and price might be different. Like one is counting ticks, the other one is counting price. So, you know, when price changes, is that equivalent to a tick? I'm not sure. But yeah, they're very similar. However, range bars look, to me, they look a bit messier and more kind of choppy. And tick charts to me look very smooth. So yeah. But yeah, Bitcoin, interesting. Decision point, if they can't break the high, or even if they break the high and then reverse, we then have a range. We then have this range, and you can expect a little bit of a bounce and chop before it decides where it's going to go next. But generally, statistically, if we're talking about distributions, typically you have accumulation, markup, distribution, liquidation. So statistically, it should go into a pullback, okay? Hi Dee, how far back do you look at support, resistance, supply and demand? When does it become invalid for intraday? Well, when it's broken. If the supply and resistance levels are still there and they haven't been broken, however, I use supply and demand concept, which is a little bit different. So I don't look for complete highs and lows. I look for zones that are close to the highs and lows on very large time frames. But I don't expect those large time frames to reach the complete high or like extreme high or extreme low, okay? And I will look at it for as long as it's valid, right? For as long as it's not broken, that's still support resistance. Now, there are some rules around that if you have tested the support resistance more than about 2 or 3 times, that it will become weaker each time the price creeps up to it again. There's definitely something to it. Having said that, if you have a range-bound market, you can bounce between the SR like 15 times, 20 times, and nobody cares. I'm going to stick around a little bit longer just to see what is going on with this platinum trade, because we've just, as we do always, we've just had a pickup in volume. We have hunted those 18 contracts at 63.3, and now I want to see this carry on. So we'll see what happens in the next sort of half an hour or so. But yeah, we'll hang for a little bit longer. So yeah, if it's weeks, if it's months, if it's a very old demand or supply, it's still relevant. You know, if I look at crude oil, for example, I'm going to drag out the continuous chart. We don't have continuous charts here, so I'm going to have to do this like this. This is a monthly chart, right? So if you look at this, we have a demand here, which is right where we are now, and you have a supply up here, right? If I plop in one of my indicators, you will start to see that. So this supply, even though it's from 2022, that's still valid. If we ever get up to 103, I will be looking for some shorts around there. But right now, we are in a supply that happened in 2021. Sorry, in a demand that happened in 2021. And it's been reactive. It's been reactive. It's been reactive. Now, how many times have we been here? It's, it's 1, 2, 3, 4, 5. I mean, this is the 6th time that we're in here. And for now, we're not seeing much interest here. So does that mean we're going to go down to this one, which was made in 2020, or even this originating demand at 25, which was in beginning of COVID? It depends, right? But there are still levels that are reactive and they haven't been broken, right? So they are still there. As long as they're there, I look at them as prices of interest, right? All right, very good question. The next one from Alejandro Phillips. How you overcome a drawdown? Sizing down, journaling, seeing what worked during times when things did work, seeing which levels you used, what size stop loss you used, and most importantly, slowing down. Size down, slow down. That's how you get out of drawdowns. Manage your account, not by the daily loss limit that they give you, but manage your account by the account balance that you have in there. That means if you have 3,000 left in the account, you don't just YOLO it on a 3K DLL, but instead, you size down and you only use 1/10 of that, maybe even less. Because if you're in drawdown, you want to trade more, maybe just use $150 per trade. So manage your account on the account balance level, not the risk limit that they've given you. Because you will usually always have some kind of a daily loss limit in the lives. I doubt that they're going to let us derail the entire account. We all still have our daily loss limits. And they're not going to remove it because that's, that's risk for the firm. That would be just silly. Okay, so that is it for now. Edward, no news for DAX futures yet. They are trying. So MP did respond, and he said they are still struggling with the conversion of euro per tick into USA dashboard. But if we manage to upvote this post on Eurex, and if we manage to get it up to like 400, even though I don't know how many people want this, but tell your friends, tell your family, tell your dog, tell your mom, tell everybody to vote this up. All you need to do is have a Google account, right? So you don't even have to have Topstep. There's a direct link to that post, and you can just upvote it. Once we've upvoted it enough, they will then move it into the front of the queue to try and get us Eurex. But I don't see it coming this year. Just because, I've been talking about it and people are still not upvoting it. Like we barely managed to get it up to 186. What that tells to the developers that this is not a high priority thing for us. So if it is high priority for you, we need to show them that. So if we can't show them that, we're not going to get it. And we're still going to have to go to crappy companies that ask you to video yourself when you want to get a payout. So yeah. Would you recommend risking 10% on each trade in the evaluation phase? No, especially not if you haven't yet taken, look, if you've taken payouts before, okay, if you managed to hold on to your XFA for longer than a week or 2 weeks even, and you've taken payouts from it, do whatever you like in the eval because you've already reached a point where you got some money out of it. It's now some positive game for you, and you want to get back to the XFA. So there's a very different outlook once you've already taken payouts and held on to those XFAs than for those people who have never taken a payout, never managed to keep an XFA longer than a few days. So it does depend where you are in your journey. I'll be honest, if I'm doing an eval, I will be doing like, $1,000 a pop if I'm doing 150K combine. Why? Because staying in a combine, unless I'm, exploring a new instrument to trade, it serves no purpose for me, okay? It just doesn't serve any purpose. So I actually use my live account for like the super serious trades, and I use my XFAs for a bit more YOLO trades, right? This is why you see me trade XFAs most of the time here. Because I do have that live account. That is like where a lot of the focus for the serious stuff needs to be. But then XFAs, to me, they're, no risk at all, really. But then combines, they're just a means to an end. And I don't want to spend, longer than a few days doing them. Unless, like I said, I'm testing something new or I'm tweaking things and I still want to have those risk parameters around. But the way I approach it, if I'm going to talk to somebody who hasn't taken payouts and they're trying to get the XFA, I would say use no more than 4% of available drawdown. So not the nominal value, but the drawdown. Because that's what you're working with. In 150K, you're working with a 4.5K drawdown. So is it then clever if you're trying to do it the right way and develop the right skills that will get you into an XFA and make you last? Is it the right way to just kind of go, I'm just going to risk a ton here and pass as quickly as possible, and then I'll have no idea what I'm doing in an XFA because I've never lasted longer than 2 days in a combine since I'm rushing. I want to be funded. I want to be funded. I want to be funded. Yeah, that's great, mate. But rushing through combines and evals, it doesn't give you the skills that you will need to maintain the account at a funded level, okay? It's very difficult. All right, let's take a few more questions and we're going to sign off. Adrienne says, morning, I will be traveling to Chicago for a couple of days end of this week. Any suggestions on who to get in touch with to set up a couple of hours to learn? Is that even a possibility? Honestly, I don't know. I'm not in Chicago. I don't know, some people don't know this, but I'm actually based in London. I do obviously talk to all the producers and everything and Hogue and everyone, but I don't think that it's like you can meet up with people, like you can go and say hi, but I'm not sure that you can set up like a tutoring session. Like maybe you can, I don't know. Who would be the best person for that? Probably, I don't know, maybe Tim, the producer. Bruno, any ideas? Have we ever had anyone asking that? Because I know that some people have popped into the Aspen Snowmass, Topstep Chicago, where MP lives. But I don't know. I don't know whether you can just rock up to the building in Chicago and just go in, because it was the former place of where all the pits were, right? So yeah, maybe reach out to someone during the main broadcast, because everybody's asleep right now over on the other side of the pond. But yeah, pop into the main broadcast today and ask them if that would be possible. I'm sure they will, either Dolby or somebody is going to have a bit more information for you. Can you still have XFA and get payouts from the XFA if you have a live account? For now, yes, but that could be changing in the future, right? So basically, we've heard some chatter in the industry, like from some potential regulations coming into the space. And basically we are well aware that if you have a live account, some of the regulators won't be happy if you just run a sim trade as well. Why? Because they, like in my head, it would make sense to get all the people who are on the sim as new locals, like providing liquidity for the markets, which would actually control the volatility of the markets a lot better. So the more traders that you have, the more difficult it becomes to manipulate the price, right? So the more speculators, the more stable the market. That's just how it is. So I'm guessing that won't be possible if the regulators step in. For now, there's nothing concrete, so you can still have a live account if you've got to that stage, and you can still have XFAs. They're not too happy with us doing that. They will probably, if you start making like, 50K in a month, they will be like, okay, enough with the XFAs and stuff. But, how many people are like that? Usually people use XFAs as a backup and as a way to A, get more payouts, and B, to maybe fund their live as well. If you got yourself into a drawdown or something, getting more XFAs and then working to transfer that money into your live, that's for now a very huge possibility, and a lot of us do that. But yeah, at some point next year, maybe be careful because there could be some changes coming. However, if there are changes, Michael Patak will announce them on the main broadcast. All right? Okay, so let me just do the plugs for you for a while. So I'm shocked to see that our Discord, Topstep Discord, has grown to 96,000 members. Oh, wow. If you haven't checked out our Discord, it's a great place to meet trading buddies and to also pick the brains of our coaches, right? All of the coaches are in there. I'm kind of in there, but I'm not like active in there, and I don't have my coach room or anything like that. Last time I popped my head in there, I got absolutely inundated with let's just say not such a great environment, so I stick away from Discord for now anyways. But it is a great place to learn, especially if you're only doing it to go and listen to people like Coach Jay, Coach Ray, Coach Paul, Coach Vince. If your aim is to learn rather than to fight with other people, Topstep Discord is the place to be. So check it out. I'm going to drop a link in the chat. Day trading is real. I thought I heard MP say the New York market's going to 22 hours a day. That 7 days a week, you mean? So so it's already running 23/5, right? But it's going to be probably extended to the weekends. It's not happened yet, so we're still, weekends are just crypto, but yeah, it could happen that we extend the markets over the weekends as well. Is that a good thing? I quite like my weekends, and even if that's a possibility, I'm still not going to be doing that. I'm going to be sleeping for my weekends. All right, and if you like what we're doing here, guys, it would be really great if you could drop us a review in Trustpilot. If you found Topstep easy to deal with, if you found that we're not making you make videos about yourself trading before we approve a payout or constantly changing rules and stuff, put that in a review, right? I mean, if it's a positive experience, we want to hear about it. Even if it's a negative experience, we want to hear about it, right? So tell others how you've found trading with Topstep. It means a lot to us. Obviously, everything is about reviews and other people's opinions. It's incredibly important in this day and age. And of course, give me a like, caress that like button. I appreciate it. If you found anything that I've said today of any value, I'm gonna go have another coffee because I'm still kind of waking up. And one final question, that will be it for the day. Ed says eventually, so no, it's not Ed, it's OHF. Which section do you prefer to trade, London or New York? Which is more profitable for you? I would say both sides are profitable for me, which is a little bit out of the ordinary because people usually have one part of the day. However, that means that I don't trade the same products for both. So for me, crude oil and gold are not particularly lucrative during London, so I therefore don't trade them until the post and my cut time, which is after 9 a.m. However, platinum and copper are extremely profitable for me for London, as is DAX, which we still don't have here, but, you know, it will come someday. And then I focus on those products. So I'm not somebody who only trades one thing. I do have the flexibility to trade the product that is more appropriate for that part of the day. And actually, I want to thank Carl Hungus, the meme lord, for getting me onto platinum, because it was, for getting me onto copper. Yeah, he's the one who told me about copper. He said, have you looked at it? Because when I started this session, I traded DAX for the London, and I never even thought about trading anything else. And then Carl said to me, have a look at copper. Now, Carl has a lot of experience, so I was like, okay, I like it. And then I spent 2 weeks in a combine to see whether I can actually make it work. I made it work. So I then started trading it in my life. And it's been, since July now? So we're coming up to about 5-6 months. And I still love platinum and copper for London outside of DAX. So until DAX comes, and even when DAX comes, I will still probably get involved with platinum and copper. So yeah, just keep that in mind when I say that I do have profitability across both sessions. It doesn't mean on the same product. All right, guys, that is it for today. Enjoy the rest of the broadcast. Remember, we do have some other overnight segments as well. We now have Coach Jay, who is standing in for Nick for a tick, who is enjoying his, I'm guessing, first time as a dad. I think the baby has arrived now, hopefully, fingers crossed. So Coach Jay is standing in for him. We also have Coach Jay's at the buzzer. So he's now doing market kickoff on Sundays instead of Nick. He's doing at the buzzer with Coach Paul every evening, Monday through Friday. We obviously have Coach Dakota doing his slow markets, and we have the London session as well. But check out the rest of the broadcast. I will probably be in chat. Maybe even later on in the week, you might see me on the main broadcast. However, my main focus is obviously the London session now. So we'll see what happens there. I will certainly tell you about any changes. Until then, until tomorrow, this has been the London session on TopstepTV, and I'm Deeyana Angelo, aka Market Stalker D. Take care, guys and girls.